Ray Dalio, bullish on China long term. Do you agree with that position?
Well, there's conflict between now and the long term, but you wouldn't want to bet against them being big and much higher incomes for their middle class in the long term. So I think that's right. But it's a treat to get to work with both Ray and Jim. We haven't seen each other in a while. Yeah, China's got a mess right now, and China and the U.S. is another mess. But they are a juggernaut, and they're not going to get any smaller going forward. But right now, I don't want money at risk in China. Anybody with money that's short term, they care about the stock price, I'd get clear of it. And I am in love with cash right now.
That's why I guess is so confusing. John, I'll go back to you on this one as well about Ray Dalio's comments. Is that what our viewers may or may not know is basically, if you're a Westerner, you can't just go buy Chinese equities. You can buy the Hong Kong shares, the H shares, but the A shares, the Shanghai Composite, you can't really go buy. You need a domestic agent, and you cannot short stocks there. I don't know why he would recommend investing in an economy with controls that are so the opposite of what our system here has been that has made him a billionaire.
That's right. Well, you know, if you let yourself think long enough, the controls have actually been relaxed over 10, 20, 30, 40 years in China, and likely would be in the future as well. And I think all Ray is saying is that middle-class incomes in China are driving the entire consumer economy there now, and that's where the profits are going to be over the next 50 years, China and India more than other places. But as I said, that's between now and then, you could get your feet shot off if you're not careful.
Yeah, and you know, Jimmy, listen, our viewers may not care about the New Zealand central bank, the Reserve Bank of New Zealand, but they cut rates. India cut rates overnight. I wonder, is this a global rate race to the bottom? Because Larry Summers noted, as we talked about earlier, this is the most sort of shaky and nervous the financial markets have been globally since before the financial crisis. Where do you think the United States falls in all of this?
Listen, I think it is a dangerous situation. If this trade war escalates and we start going with a 25% tariff on all of China trade, and the president has said he could take it even higher, I think that's a dangerous situation. And one way it reminds me of the financial crisis is that we may not fully understand all the economic and financial linkages. So these sorts of very static analyses that will chop, 0.3 percentage points off U.S. GDP growth, I'm not entirely sure about. But just one comment about Ray Dalio's forecast. His forecast to me says that he believes that China's centrally planned economy, which doesn't seem to be moving in a more market-oriented direction, is an economy that can be on the technological frontier in the 21st century rather than the United States. I'm a little skeptical of that.
Yeah, and I don't think you're the only one that is skeptical of that. I mean, Jimmy, I guess the question ultimately is this: how does this trade fight end up? Do you see an end to it, if there is an end at all to be had this year? Or maybe this is going to be kind of one of these pre-election surprises where suddenly everything is resolved right before a couple months before the presidential election next year and stocks take off.
Listen, I think given sort of the mercurial nature of President Trump, you can't write off that that option that he just might sort of declare victory and we'll go home sometime in 2020. But then there's also sort of the long war, the Cold War scenario. Listen, is that possible? I think it is. But before you bet on there being a long trade war between the United States and China, I think you would have to see the president actually talk about it in those terms, which he hasn't. I think you'd have to see allies getting on board. I think you'd have to see the American public be made aware that we are in it for a long term and there will be pain. None of that has happened. So if I had a bet, I think this is not going to be a long trade war or a U.S.-China Cold War. I think we could see a resolution in 2020.
John, what do we bet on? Gold is soaring. Bitcoin has done well. Look at U.S. Treasury bonds, $15 trillion globally, negative yield. I mean, stock market is nice, and it's had a pretty good 2019, but is right now maybe cash king.
Well, Brian, you said it earlier. The fear is what's driving the money into the dollar and into the bond markets. that fear has a lot of causes right now, all the way from the Russian riots to the Hong Kong riots to the Venezuelan riots and many in Xinjiang and so forth. Many stories out there that are not going to likely go away. But all of that has made securities overpriced. And when bonds get overpriced, stocks get overpriced, private equity gets overpriced, venture capital gets overpriced, and you end up with things that later on you look back and you say, hey, that was a bubble. A bubble happens when prices get too high and then all at once people somehow lose confidence. The Lehman moment was the loss of confidence in 2008.
John, I'm sorry to interrupt, but do you think that we are in a bubble? I mean, we've got private equity often bidding against itself now. SoftBank buying everything. The number of available shares in the stock market continues to shrink. Do you believe there is or are bubbles out there right now?
Absolutely. I think the prices are crazy right now. And when it falls apart, it's when a network fails. A network is like the electricity grid. When it fails all at once, the lights go out, and then you say, what happened? Well, what could cause that now? One would be a supply chain interruption with parts that come from China to Taiwan to Mexico to the U.S. going wrong, and you have to shut down factories. That's not as likely. What's more likely is you have a financial network shut down. What would cause that right now? In May, there was a bank taken over in China, insolvent, Baoshang Bank. Chinese corporations have huge amounts of dollar debt. When the RMB drops, the weight of the dollar debt in RMB goes up for those companies. Those same companies have enormous amount of shares pledged as collateral for bank loans. And so it doesn't take much of a fuse to unwind that thing. And when it does, capital leaves China, the RMB goes down, and we end up with more of these brain freeze incidents like we had with President Trump this week with the imaginary currency manipulation.
Yeah.
That was terrible. That was a terrible thing that happened this week.
All great points. And Jimmy, last point to you. And by the way, I want to show this. You talked about currency manipulation. A few moments ago, we broke again through that 7-to-1 level. Look at that. We're back below 7-to-1 on the Chinese yuan to the dollar. We saw what happened, Jimmy, when that happened on Monday. Stocks fell. We're not seeing a reaction in the futures right now. Dow futures actually fractionally higher. But if China is a manipulator of its currency, it doesn't appear to be doing a very good job.
Well, listen, they can only manipulate it, or in other words, stop manipulating it and let market forces work so long because they're worried about capital flight issues. And listen, if the Chinese currency is easing, look for more attacks on Jerome Powell.